Welcome back to XRP Pro Ledger, the only place where we cut through the noise and hand you the truth about where this market is actually heading. And today, I need you to stop whatever you're doing because what is unfolding in the XRP ecosystem right now is nothing short of historic. XRP just smashed back through the 1.45 level on the 1 hour chart. A golden cross is forming on the RSI, and trading volume has absolutely exploded past 1.81 billion. That is not retail noise. That is institutional heat. On top of that, Rakuten, one of Japan's most powerful tech and commerce giants with 44 million active customers, just integrated XRP for direct payments across 5 million stores. Let that number sink in. 5 million stores, 44 million users, and they chose XRP. But here is where I have to pause and look you dead in the eye, because right at the exact moment this ecosystem is hitting its most explosive growth phase, a trap is being laid out for everyday retail investors, and most of them have absolutely no idea it is already closing around them. Let's talk about the Rakuten integration first, because the sheer scale of this announcement is being completely underestimated by the broader crypto market. When a company the size of Rakuten, a household name in Japan with deep roots in e-commerce, fintech, banking, and loyalty programs, chooses to build XRP into its direct payment infrastructure across 5 million merchant locations, that is not a pilot program. That is not a press release for attention. That is real-world utility being deployed at a scale that almost no other digital asset in the world can claim. Think about what this means operationally. Every single one of those 44 million customers now has a pathway to spend using XRP in their daily lives, at restaurants, convenience stores, electronics retailers, and everywhere else Rakuten's network reaches. This is the kind of adoption that XRP bulls have been talking about for years, and it is now happening in real time in one of the most digitally advanced economies on the planet. This alone should be headline news across every financial platform on the internet. And if Rakuten were the only thing we had to talk about today, it would already be an incredible segment. But then we layer in what is happening in South Korea, and the picture becomes even more stunning. Kyobo Life Insurance, one of South Korea's largest and most established financial institutions, has officially entered into a partnership with Ripple to tokenize government bonds directly on the XRP ledger. This is not a small fintech startup experimenting with blockchain. This is a legacy insurance giant with decades of institutional trust behind it, choosing to put sovereign debt instruments on the XRPL. Tokenized real-world assets are the next frontier of global finance. And the fact that a company like Kyobo is moving in this direction with Ripple tells you everything you need to know about where institutional confidence in this ecosystem currently sits. The infrastructure is being built quietly and rapidly, and the market is only beginning to price it in. Now let us bring Standard Chartered into this conversation, because when one of the world's oldest and most respected global banks puts out a formal price target, you do not dismiss it as hype. Standard Chartered has published its base case for XRP at $5.50, its bull case at $12.50, and its long-term target sitting at $29. A G7 connected, systemically important global bank has a long-term price target of $29 on XRP. This is the same bank that has a significant institutional presence across Asia, Africa, and the Middle East, precisely the corridors where cross-border payment inefficiency is the most acute and where XRP's settlement layer has the most immediate and measurable value to offer. When Standard Chartered assigns a number like that, it is because their analyst teams have modeled real adoption scenarios, real volume flows, and real utility curves. That is not speculation. That is a research-backed conviction call. Adding to the infrastructure momentum, Exodus Wallet has just rolled out native XRPL and RLUSD support. And while this might seem like a smaller headline compared to Rakuten and Kyobo, do not sleep on what this actually represents. Exodus is one of the most widely used self-custody wallets in the world. known for its clean interface and accessibility for everyday users who are just getting started with managing their own digital assets. Adding native XRPL support directly inside Exodus means that millions of existing Exodus users now have seamless, one-click access to the XRP ledger ecosystem without needing to jump through third-party hoops. And the addition of RLUSD, Ripple's regulated stablecoin, opens up a real liquidity pathway that connects XRP's native ecosystem to dollar-denominated value in a way that is compliant, stable, and user-friendly. This is the kind of wallet-level integration that drives real adoption, not just headlines. All of this institutional momentum, the Rakuten integration, the Kyobo partnership, the Standard Chartered targets, the Exodus support, is happening against a technical backdrop that is flashing green on almost every meaningful indicator. The golden cross forming on the RSI is particularly significant because it reflects a shift in the underlying momentum structure of the asset, not just a price spike driven by short-term speculation. When momentum indicators align with fundamental catalysts of this magnitude, it tends to create the conditions for sustained price discovery rather than a quick pump and dump cycle. The $1.81 billion in trading volume we are seeing right now supports that reading. Volume like that does not come from retail traders chasing a chart. That kind of volume reflects organized, purposeful capital movement. And in most historical contexts for XRP, that kind of volume has preceded sustained upward trends rather than preceded reversals. But now I have to shift tone on you, and I need you to lean into this part of the segment just as hard as you leaned into the bullish news, because what I am about to tell you could be the difference between building life-changing wealth and getting completely wiped out in this next phase of the cycle. The XRP ecosystem is growing at an extraordinary pace right now. New DeFi protocols are launching. Centralized platforms are spinning up products. AI agents are beginning to interact with XRPL infrastructure in ways that are genuinely novel and exciting. And everywhere you look, you are seeing the word yield being dangled in front of you. Platforms promising you passive income, returns on your XRP, rewards for locking up your bags. And here is the brutal truth that almost nobody is willing to say out loud. Because the XRP ledger has no native staking mechanism built into its protocol, there is no legitimate protocol-level source for the yields that many of these platforms are advertising, which means the yields have to come from somewhere else. And in most cases, that somewhere else is you. This is the yield trap, and it is one of the oldest and most effective scams in the crypto playbook, dressed up in new clothes for the current cycle. The mechanics are straightforward and predatory. A platform launches, it promises attractive yields on your XRP. It attracts retail users who deposit their holdings to chase those returns. And then, at a strategic moment, usually when the platform has accumulated enough assets and retail sentiment is at its most euphoric, the protocol either collapses, rugs, or quietly restructures in a way that leaves depositors holding nothing. The retail users who thought they were earning yield were actually functioning as exit liquidity for early participants and insiders who were positioning to sell into exactly the buying pressure that retail enthusiasm creates. You are not earning yield. You are being harvested. And the more exciting and legitimate the broader XRP ecosystem looks from the outside, the easier it becomes for bad actors to hide inside that excitement and set these traps. So what does due diligence actually look like in this environment? It means you need to get genuinely uncomfortable asking hard questions before you hand your XRP to any protocol or platform. Where does the yield actually come from? Can they show you the on-chain mechanics that generate it? Is there an audited smart contract? And who performed that audit? Does the team have verifiable identities and a track record you can independently verify? What are the lockup conditions? And is there any scenario in which your assets can be frozen, paused, or forfeited under the platform's terms of service? These are not paranoid questions. These are the exact questions that institutional investors ask every single time before they place capital anywhere. And the reason retail investors keep losing in crypto cycles is precisely because they get swept up in hype and skip the homework. The bullish news we covered today is absolutely real. The trap being built inside that bullish news is equally real. Both things are true at the same time. The bottom line for every single person watching this right now is this: XRP is in one of the most consequential and potentially rewarding phases of its entire existence. The Rakuten integration, the Kyobo partnership, the standard chartered price targets, the Exodus wallet support, the technical momentum, all of it is pointing in the same direction, and it is pointing there with serious institutional backing behind it. But the exact conditions that make this moment so powerful are the same conditions that make it dangerous for the unprepared. When liquidity rushes into an ecosystem this fast, bad actors move just as fast to position themselves in front of that incoming wave and take what they can before anyone notices. Your job right now is to stay informed, stay skeptical of anything promising yield without transparent on-chain mechanics, and protect your position while staying fully exposed to the upside that this ecosystem's legitimate growth is building. The biggest mistake you can make in this market is getting shaken out of a real asset by a fake opportunity. If this analysis changed how you're thinking about XRP, hit like and subscribe. I drop deep dive breakdowns like this twice a day to keep you ahead of the market.